like I said, I'm a tax expert in the early childhood education space. Just a little background, all that is a lot of noise, but I love doing my work. I love working with childcare providers just because I also experience the valuable work that you do. I have a 9-year-old, and believe me, there was a time there was nobody else who was reliable that I could use to help take care of my child except for childcare providers. And so I am forever indebted to the service and the work that you do. So today, let's talk about taxes, okay? So in my world, taxes is not a bad thing. The IRS is not the boogeyman. If you have to pay taxes, chances are your business is actually growing. You are doing well and you're making some profit in your business. What we want to make sure as providers is that we are compliant with the rules and regulations as far as what write-offs we are taking and how much tax we are paying. But the one thing that I'm also passionate about is not ever tipping the IRS. So if you are entitled to take a write-off, please go ahead and do it. The most important thing when thinking about your taxes is going to be, believe it or not, record keeping. If you keep good records, chances are you're going to save yourself a lot of money and a lot of headache in case you're audited by the IRS. So always keep that in mind. The first order of business is good record keeping. So when it comes to taxes in the childcare industry, I like to break it down based on the provider and the size of the provider. So if you're a family daycare provider versus if you own, and the second category I'm going to use is when you own a center. So as a childcare provider, chances are you're running the business out of your own home. I know some people that actually rent external houses for their businesses, but for the most part, most home care childcare providers, the family care providers do run the businesses out of their own homes. So the IRS recognizes this, and they give you a more than generous write-off on your time space percentage. And this is the amount of money that you can write off from the business use of your home. And the way it works is look at your home in totality, okay? Look at the total square footage of your home that you use for your business. Is it the garage? Is it the hallway? Is it your basement downstairs? You also want to consider which specific areas that are used exclusively for the business. That is going to be very important in our calculation. Second, we want to look at the area that is partially used for the business. So if you use your kitchen, right, to prepare the meals for both your family and the childcare, that is partial use. If you're using a bathroom or a hallway where you're making, you're using that hallway to get to your office or to your family home, that is partial use. So you want to keep track of total square footage, how much of that square footage is for exclusive use, and how much of that is partial use. The other factor here to consider is the number of hours you're using in your childcare. So if a number of hours you're spending in your childcare. So you want to consider before you open your doors in the morning, do you do a little bit of cleanup to get everything set up or breakfast set up for the kids? Obviously the hours when the childcare center or the family childcare is open, you want to consider those, as well as after the kids have been picked up, do you do any kind of cleanup, any kind of planning for the next day? These are very valuable hours that you need to keep track of, whichever method you use. I'm a big fan of technology, so if you can get a software that can help you track these numbers, I highly, highly recommend it, because when you think about it, the childcare business is a tough business. You're going to be spending a lot of hours. I would rather have you spend these hours in generating income for your business rather than administrative type of work. So if there's any kind of technology you can use, I would highly recommend you leverage off of this type of technology. Okay. Now, there is a formula for calculating how much percentage you can get. I've seen childcare centers that can write off close to 40–50% of their home office. And the way we do that is based on all those different variables I've given you. We are going to then look at your actual expenses for running the home. Do you own the home? Then your chances are you're paying some mortgage, you're paying some taxes. We want to look at your utilities. How much are you paying for water, light, heating, gas? Do you pay any kind of home maintenance? You know, if your parents are walking through your driveway, if you're spending time on some sort of landscaping to make your entranceway attractive, those are costs to consider as write-offs. So again, keeping these records, knowing from January 1st to December, how much did you spend on home maintenance? If that is the case, then you can use this as write-offs. These are numbers you will provide to your tax professional at the end of the year, and they'll be able to give you that calculation. I believe, Benny, with Playground, you do have a software or a solution here that can help providers come up with accurate numbers on the time space percentage.
Yeah, totally. And I will show, once you are done with the presentation, I'll show a bit of the specific things you walk through, because we totally do offer time space percentage calculators directly through Playground.
Yeah. Okay, wonderful. And then as a location, if you own a location, and I want to run through this, if you still have an office in your home, post-COVID, a lot of us work from home. And so you might still have a space in your home that is regularly used for your childcare. If it is legit, okay, it is not a home that you use sometimes for as a bedroom for your guests. If it is a space that you use specifically for your business, you can write that off. Again, this percentage is not going to be as high as the family care providers, but you can still get a write-off there. The second thing I want to talk about is the mileage tracker. Wrong spelling there, but mileage is so long as you maintain your home office, you are allowed to write off some of your mileage for business expenses. Now, your business expenses could be when you're going to get your supplies, your groceries, training, whenever you have conferences. So make sure that you're tracking your business miles every time you're making any kind of travel for business purposes. I usually recommend, again, that you use technology here that can help you, quickly categorize your travel, so that at the end of the year, you're providing your tax professional with all the information needed to get that mileage tracker. Some people might write this off, but I'm telling you, if you're 1 hour away from your center, consider how many miles you're driving back and forth. And for each mile, you get 63 cents to the dollar. Over a whole year, that can be quite substantial, and that can help you reduce your tax bill. Again, let's talk about business travels. A lot of times, providers have to keep up with their professional education. This could be in the form of conferences. You might be sponsoring some of your employees, so you want to consider accommodation, flights, valet services, tips that you're providing. Keep good records. And again, use technology. If you have the kind of technology that allows you to take pictures of these receipts, use that. If you're paying for meals during the conferences, write on the back of the receipt, the 2023 conference, and then maybe write a list of names of people who were part of that meal. That is so important in case you ever got audited. Again, we're not looking to be audited, but if that day unfortunately comes, that's what the IRS is looking for, support for your numbers. Another very good write-off for the childcare industry is when you purchase equipment, okay? So maybe you're doing some build-out in the childcare, you're expanding, and you're gonna end up spending money. A lot of childcare owners have also gotten some grants, but these grants are very specific to expansion. This could be an opportunity to write off the depreciation expense. And just so you keep in mind, the government had very generous write-offs for depreciation. This started in 2018, and it's going to sunset in 2025. I'm not saying go out there and buy all the equipment that you have, or you can. What I'm saying is, if you happen to invest in equipment, okay, there's a likelihood that you can write off 100% of that on your taxes. So always keep in mind, be strategic about how you invest in equipment, because they could likely be a depreciation write-off. And then really quick, I wanted to talk about retirement savings. Now, this is not really, a hack to reduce your tax, but it is in a way. So, as a business owner, to me, I always consider if you're running your business, I guess you have a goal, and that goal, besides and beyond taking, I believe you want to also build wealth, right? And so as part of when your tax planning, I would want you to consider retirement planning. And you don't have to have a lot of money to start off, okay? But what you need is a good professional that you trust, okay? That you can, tell them about your goals. And usually in the financial planning industry, there's always professionals that can help you with this. So consider setting up a retirement plan, whether it be a 401k, a SEP IRA, a simple IRA, or even more sophisticated defined benefit plans, depending on the size of your income. So writing off some of your retirement expense is one good way of reducing your taxes. This is just part of your planning. Just think about it. If at the end of the day you're disappointed that you have to pay so much money to the IRS, just take a pause. You might have an opportunity to set aside money for your own retirement, which will benefit you at a future date. So that's a quick runoff of some of the deductions that you can take on your taxes, especially on your childcare business. So I know I was supposed to talk for 15 minutes and I think I've gone over. So Benny, if you can take it from
Yeah.
here.
Yeah, that was perfect. Thank you very much for that. I think there's a lot to unpack there, and I'm sure people will have questions. I just want to share because you mentioned a couple of things,
Yeah.
and I'm going to take over the screen.
Okay, let me stop.
For those who are using Playground, we do offer some features that you may help save time. Like Olga said, the most important thing here is record keeping. And in Playground with our expense feature, you're able to do that. So you can see, you're able to track all of your expenses. And for family childcare providers or centers with home offices, you're also able to do your tenant space calculation directly from Playground. So you'll put the total space of your home, for example, how much inclusive space you use for your program, how much you regularly use for your program. You'll basically fill out this equation and it's going to give you your tenant space percentage based off of that. You'll just put in, I'm just putting in sample information. You'll save this. It's going to say that your total percent business use of your home is 63%. And you save this, and then you can go to any expense you have. And with Playground, you can either manually add an expense in, or you use our Playground cards that automatically pull expenses in. You can edit this, and you'll put a time space usage. And now this is going to show you that automatically 116 of this is tax deductible out of the 185 expense. And you're also able to add your receipts into Playground as well to keep track of your photos of receipts. We also get to professional development. This is tax deductible. You can log all these in Playground as well by adding miles. So you'll go here, add the dates, add the vehicle that made the trip. You'll say home, you'll say destination, you'll say buying crayons, whatever you did in this trip. I drove 20 miles, and you can make a round trip to make it easy. And all of a sudden now, those 20 miles were logged, and now it's added into your total tax deductible miles for that year. So very easy to keep your records clean with Playground. For those who are using us, you have this available. For those who are not, if you're interested, we can chat later. But now I want to hand it back to everyone who's here. And if you have questions specifically that you want to reach out, send them to the chat, unmute yourself, and Olga can answer any questions you may have to the best of her ability.
Absolutely.
So I have a question, and it came up when talking to Ben in another Zoom meeting that we had about the expenses. They have that there's no, like, for your hours that you do outside of childcare, they have like, I can sign in and sign out. How does the IRS, right now, I figure out other hours in a different program. And I say, I'm meal planning, I am doing yard work. how specific, how, like, how do I track that? Because with them, it would be that I have to check in and out of the childcare.
Mhm. Okay, so tracking is very individualistic. So you know, you might want whatever software you use, but this is just the broad picture. So anytime you're working for your childcare, to me, the litmus test is what is your intention? Okay, if the intention is I'm meal planning, I'm cleaning up for the business, I am, you know, writing reports for the parents, that is hours that are trackable. Some people might use Excel, some people might use you know, pen and paper. Ben's team also have their own software, so whichever works best for you is what you want to utilize. Think about it. Say we're being audited tomorrow by the IRS and they want to see how much time are you spending on this. One thing they might look at is your pen and paper details, because they want you to be keeping these numbers regularly. Then they're going to go back to your schedule. In your timetable for the day, do you say, this is the time I do this, this time is blocked for meal prep, this part is blocked for planning for the following day. So any data that you use that you can then prove to a third party that this is exactly what I did is usable. So use software, use whatever your comfort level is. Just, to me, I always think, when we get audited, what documentation do you have? I don't want you to stay up the whole night coming up with numbers that this is what I did, or these are the averages. You'd be surprised that if you kept records real time, the actual numbers would shock you. There would be, most people, when they start estimating, they underestimate, right? So so right now, whichever software works for you is what you want. And then think, how do I prove this to a third party who might not be with me day to day, but it is a logical, record.
So I understand, and I know that's what I do, and I don't track
Mhm.
it as much as I should, and that's where I probably lose. But I've been getting better. I've been doing this for 30 years, so I understand it and trying to do it. That's why I'm trying to find an easier way.
Other than
I'm just
blocking it out.
with the playground.
Mhm.
I'm trying to figure out how I can still do the playground and use their software, because
Mhm.
there's nothing that shows. I'd have to write something down somewhere else
Mhm.
to say what I was going to do
So Sherry, what you're
outside of my
asking is
plan.
when you check in and out, you want to add a memo for what you were doing when you were checking in and out.
And if I could do that, that would be awesome. So when I'm signing in and out, I mean, the other thought I thought was I could, because I have my playground, because I'm in home. I have my little child care, little darling's child care. I was thinking I could do have different rooms for all the things I do, but that's got a lot of like work to do all that also. But if I could just have a little memo of what I'm doing when I
Mhm.
am signing in, I'm working with I'm in that room, or if I am meal prepping, if I could write in things and have,
Mhm.
I'm doing Facebook postings. I mean, there's so many things that I do, and if it'd be easy where I have that right in
Yep,
my
yep.
hand, I can do that.
I hear you.
That's what I would like to see if I was going to use Playground. I understand that I need to have, and that's my problem right now, is that I know that I need to do it, and I've been better at that. I write a lot of things in the calendar, but I don't write everything. There's so many things that I can take my time. Like you said, if you really figure it out, you're doing a lot of things all for your childcare. So
Yeah.
I was just trying to figure out if there was another way that we could connect the playground and
Yeah, I
help
mean,
understand that.
I'll tell the engineering team and see if we can add that in. Potentially
Mhm.
just adding memos to your check-in and check out when every time you check in, you'll just put a note of what you did. That
Mhm.
might be possible, yeah.
Okay.
Yeah.
Yeah.
And the
But
check-in
that's
and check
very
out part.
important. I know that it's just, I know that there's a person that said that she just started, and just getting the habit of doing it is the biggest thing with mileage. And,
Right.
I'm trying to get better at doing it on a regular basis,
Mhm.
and not like what I just did right now, and try to do a bunch of hours, try to figure out what I did for the year. So
Yeah, it's tax season right now, and I have one childcare provider that came to me and said, "Okay, I want you to file my tax." I said, "Okay, fine." I said, "Do you have your mileage number?" She said, "Oh, I don't really care about that. Just go ahead and file." And then we filed, and she ended up owing. She's like, "Wait a minute, okay." So then we got down to it. So how much was your mileage? It turns out that she actually lives almost like she does 100 miles, or like a ridiculous number of miles on a round trip. Came out to about $9,000 that she could write off. Okay. And then we looked at her own home office. She was very reluctant. She's busy. She's tired. She doesn't want to be bothered. But I said, just give me your mortgage statements. I want to see how much taxes you're paying. Again, substantial amounts. Then we're like, okay, you know what? You can still write off something for retirement. It's not too late. Then she's now looking into talking to a financial professional, see if there's still some money she can save. So don't overlook these write-offs. They could actually save you a substantial amount of money.
Yeah, anyone else? Claudia has a question, yeah?
So I was listening to you when you were mentioning like time and space, and like you were mentioning different areas, and this is my 4th year doing this, and unfortunately we've had like someone doing our taxes different every year because we haven't found the right one. You said basement. Is that only when you're using it 100%? Like, I've been curious about the garage because all my materials take my husband, I think, has 10% of the garage, and the rest of it is my materials. And I've been wanting to write it off, and I get contradicting responses. Like, every time like someone else looks at my taxes, they're like, "No, you can't write this off. No, or that doesn't count." And I'm like, "Well, the children have to walk through there, like the patio outdoors." Like, they're like, "Oh, you can't write that off." I'm like, "Well, they can't exit if they don't step on this. Like, it doesn't make sense to me." So question number 1, can you not write the garage off? And question number 2, I mean, not that I have time for this, but for the sake of my business, because like you said, I do not like giving my hard-earned money away, especially to the IRS. So is there, like, I know that there's a code because people talk about the code. Is there a section that says, hey, this applies to childcare, that I can spend my precious fun time reading this thing to learn? Because I feel like, nobody cares about my money the most that I care about my money, right? So when I get different questions or answers like this, I myself want to learn. I'm not going to become certified and take taxes on top of what I'm already doing, but how can I learn more and research more so that I can have these answers for myself?
Okay, so as regards to writing off your house, okay, when it comes to the IRS, if it's too gray area-ish, I typically stay away from it. Now, if you're using your garage for storage, I would write that off. And if you want it to be specific, such that your husband's tools are in, you have your supplies, you can just carve out that 90% and write that off. That one I'm totally cool with.
And I can't be a smart ass and say we do use his tools to fix a lot of stuff in my class. So
yeah, you could use that, but just think about that revenue officer coming to you and saying, "Okay, show me this and show me that."
I don't want to poke the bear, but I do want to get the most out of it.
Correct. So basically, what we do is study the law and then try to apply to our real life situations. Like taxes, just like everything else, there's always a gray area. But I want to make sure that for the stuff that is really, really obvious, I want that write-off. So I'm talking about your home. If you build a fence because based on the code for your state, you had to create a safe environment for these children, a fence that you wouldn't have built if you didn't have the business, right?
Yeah.
Then that is
someone fell through the deck over the summer, so I'm 100% claiming the deck. I mean, that was ridiculous, to not be able to, because they have to step on the little, deck, and that was a safety thing. Right.
It is a safety thing. So again, just think about the intention all the time. So there's the obvious stuff, and then we have to look at these specific write-offs for, you know, are they really for childcare? Would I have built out this deck if I didn't have this business? Is it a requirement from the state government or the licensing office for me to run a safe environment, to run a safe, you know, to create a safe environment for my children? And if that is the case, then it's likely a write-off. Now, the IRS has provided an audit guide for the childcare industry. This is because this industry is kind of unique. When you operate your family childcare, you will have specific write-offs that the rest of us normal people don't get to write off. So let me just get this. It's the IRS audit guide for childcare. It's the IRS audit tax guide for childcare. Now, if you're looking for a nice little reading to do, you know, before you go to bed, something really nice and enjoyable to read, I would suggest that you go into the IRS website and read the audit, the childcare provider audit technique guide. And what this does is, this is the training manual that they give to the revenue officers, okay? So everything they tell you they're going to be looking for, try and make sure you have that in place. So for example, if you're not keeping track of your meals, right? What other opportunity do you have to, if you're going to be claiming meals, and to make sure that that number is correct? Do you have attendance records? Do you have, you know, do you as a policy provide maybe 3 meals and 2 snacks? Is that something that is being implemented? If that is the case, and you do have the policies to back that up, you can recreate that record. But let that audit guide be, you know, guide you. Don't fall too much on the gray areas. Just follow those rules, because when the auditor comes, and I'm just talking from an auditor standpoint for your taxes, they want to make sure that there's a logical flow of this data. If you're open 5 days a week from a certain time to another time, so you're maybe 5 to 6, how many hours are those, right? Is it realistic for us to say you're going to need an hour before you open and an hour before, you know, after close, right? Those are the kind of numbers they're going to be looking for, okay? So the audit guide is a good place to go to. So the publication, it's a PDF file that I'll provide on the chat, but also you can just Google the IRS Child Care Provider Audit Technique Guide. This is their Bible when they come in and want to see, you know, how much write-offs you've been taking. So this could be a good standing point. I know in the industry there have been some very good experts. One person that comes to mind, he retired. Benny, do you know his name?
Tom Copeland.
Yes, Tom Copeland also has a very good, you know, resource for providers. Go through those workbooks, go through the write-ups, even if it's, I don't know if he's still writing the books, but I know when I started 5 years ago, that was a really good guiding point. So you want to also, you know, just be, you know, up to date with the audit guide, and also some Tom Copeland books, and also training such as this. I think you won't go wrong if you keep yourself updated.
Okay, that sounds wonderful. Thank you so much.
Caitlin?
Hi, yes, so I have a question. Because I started my business this year, I wouldn't technically be dealing with any taxes until the next upcoming year. But I started the process back in September, so that we're in 2024, so September of 2023. And I got my EIN number, pulled all that, started, you know, obviously buying and making my home a daycare. How do I incorporate, are those write-offs just throwaways, or how do I use them, or use them as write-offs? I don't know. Does that make sense? That question?
Yeah, so you started in September of 2023. That's when you got your LLC. Is that correct?
I did sole proprietor.
Okay, sole proprietor. Okay. Did you have any income in 2023?
Not with my daycare. Not with my daycare.
Not with your daycare. Okay.
I was doing my my licensing, sitting in the courses, building my, so buying like all my, safety pool fence and, all the supplies and bedding and X, Y, and Z. And my spaces in the home, for like square footage purposes, and what I was gonna have open for the children to have access to. But I don't know, like, my question is, how can I apply with those? Like, how can I use those as write-offs? I guess, I don't, if that makes sense. I wasn't making any income. My first child, my first week or first paycheck was technically the week of January 16th. So, of this year, so.
Okay. Was there a requirement for you to get a license from the state to be able to operate your childcare?
Yes, so I got my license through the Florida Health Department here in Ellis County. I'm in Florida. So I got my childcare provider's license. So, and I sat through my 30-hour clock hour course and got the safety courses and all. So I did all that. It took me about 3 months. And then finally in September, the inspector came out and granted me my temporary permit for the whole year. So technically, until I get through all my 3 inspections the first year, I'm not technically like officially licensed. I'm on a temporary license. So.
Okay. So the good news here is that all these expenses, all these business expenses, whether it's supplies, whether it's getting education, whether it's tracking your mileage to go to offices or conferences and educating yourself, all those expenses can be written off. Okay. We use something called startup expenses. So by IRS law, the way they do it is you can write off those business formation expenses like getting an LLC, getting your state licenses. You can write off up to 5,000. You can also, okay, go ahead.
I'm sorry, you said up to 5,000?
Up to 5,000. That's business formation. So if you had to do anything that's compliance related, that's a 5,000 write-off.
Okay.
The second thing is you can also write off all these other supplies that you're getting, all the professional education that you had to put in place. That's also a write-off, again, up to 5,000. There's a little bit of a caveat. If you purchase equipment, this is equipment, I'm considering types of equipment that's going to last you more than a year. Talking, maybe you purchase cots, baby cots, or, high value equipment. Because of the depreciation law, you're actually allowed to write it off in the first year. The trick and the litmus test when you're just starting your business is, when was this business operative? Okay. In my world, a business is considered a business if you start generating money. Okay. Which clearly here in 2023, there was no income received. Okay. So my second test is, was your business really operational? Because the IRS can be very vague. Yeah, they'll tell you, you can only write off these expenses if your business is truly operational. So we want to use various tests that then will make this business operational. So if you got a license in 2023, yes, we can give you a pass. But then it starts getting gray area-ish, right? But remember, you have all these expenses. You can still use them in 2024 because in 2024, you have that income. So looking at your tax profile right now, okay? You spend a bunch of money in 2023. Did you get your license in 2023? To me, that is justification that that business was operational. I'm going to write it off.
Yeah, I got it December.
You got it in December. In that case, because it's kind of so close to the end of the year, would you consider saving all these costs as startup costs and then writing them off in your 2024 tax return?
Okay.
I want you to look at your profile right now with maybe you have other sources of income, whatever you have going on in 2023. Is it going to be a bad tax year for you? Are you going to own? And this is something that you'll work with your tax professional, explain it to them. And then 2024 is a very strong case for your business being operational. Then you'll grab all these accumulated costs, okay? Including the estimated time space, including all that, and you can use it in 2024. And at 2024, I don't care if you're making a loss. In fact, if your business is just starting, you're lucky if you're making profits in the first couple of years or 3 years. And so we expect you to have a loss anyway. So you might have a bigger loss in 2024. So have conversations with your tax professional. Let's look at your profile with the current income, current expenses, excluding the business. Are you still okay?
Got it. Yeah, no, I've been reading the Tom Copeland books, and then I've set aside all my receipts, like all individually for each month, and I have all my notes written and things, like I've used my calendar to log my hours. I have everything prepped, and I've been putting about anywhere from 17 to 25% away for taxes just to cover my, because I just don't know. I do it all myself. I don't have a tax professional yet, because I've been mentored by somebody else, like somebody else that's in the business. And I just, if I can learn from somebody else and learn myself, I don't mind doing it. I can do it.
Yeah, I think record keeping is the main thing. If you have all those records ready, even if you use like TurboTax, H&R Block, or paper file, so long as you have these records and you can defend them, please, let's use that, right?
Okay. Very well. Thank you.
You're very welcome.
Awesome. Go ahead.
Yeah, the recurring theme here is just the records, the records, the records. I know it's boring and who knows, nobody might have time for it, but there's a lot of technology in this day and age. Let's use it. I'm sure you use it for communicating with parents, tracking, if you have employees. Let's just leverage that and feel kind of good about our taxes. Chances are, if you feel comfortable and the numbers look right, chances are they're right, but just track them. Just have a way of tracking them.
Record keeping is important. Like you said, it's not the most enjoyable activity. That's why we try and make it a little bit easier with Playground. But you want to have everything somewhere for people to in the day that you maybe get audited, you want to make sure everything's good to go.
Yes.
Any questions from the coaches?
Yeah, if you get audited, then just tell the IRS, bring it on. Bring it on, and you'll be surprised. If you push back with valid numbers, they also kind of, they get shocked and they're like, okay, we'll take it easy.
Yeah.
Tom Copeland also talks about it. The IRS is not that mean. I feel, and with all due respect, I feel that the state governments are way more vicious than the IRS.
I also want to say one thing. I know some people have left, but everything that's discussed in this webinar is not legal or tax advice. You guys should always be consulting with your professionals in the field, and what's how the Q&A, everything that Olga said is purely commentary, and nothing should be taken for financial advice. That's my liability.
Yes, please, and I thank you for bringing that up, because everybody's tax circumstances are very, very different. My filing status can never be the same as Amanda's, right? Maybe we live in different states. Maybe, you have, for example, I'm a single mom, head of household, one child. Maybe you are a 2-income house. Maybe you want to file separately from your spouse and things of that nature. I could never, use my tax profile to determine how much tax you're going to pay. So always get a trusted professional that you can run your numbers by.
Any questions from the coaches? Anyone else have any questions?
Can I ask, are there people in the group that maybe consider putting aside money for retirement?
It's something my husband and I have talked about, but have yet to follow through. Last year was the first time that our business made money, and we got hit with a big amount. Luckily, like the previous provider was saying, I had been saving more than I should, so it wasn't like bad. And then someone else looked at my taxes, and like you were saying, they they didn't take the depreciation or the taxes of the home and things like that. And suddenly we got our whole money back. We have still yet to see. I mean, the money left within 5 minutes of hitting the submit button to the IRS, but here we are, you know, a year later, and we have yet to see the money come back. But yeah, it's something that we have talked about, but have yet to follow through, unfortunately.
Yeah, and take it in small chunks. Don't get overwhelmed with this retirement. You know, I see owners who are so profitable, maybe because of grants and funding that they got in the year prior, that they panic at year end because they feel they're gonna owe. So you got all this grant money, you didn't spend it all, and then you end up giving it all back to the government. And we really don't want that. But retirement is a good place to start. Don't ever feel pressured. Don't work with anybody you don't feel comfortable with. But it's just, you know, just do something small every so often, so that you can start building a nest egg and also save a portion of your money for your tax return.
Okay.
And then there are people
She
from
said in the
Florida that
chat
don't
that
have
she,
income tax.
Cindy in the
Huh?
chat says she does an IRA.
Oh, beautiful. That's awesome. That's awesome. And you know, I'm not an expert on IRAs, but I like to kind of just do it and forget it, or set it and forget it type of thing. And you know, the experts will take care of the investments, but just setting something aside is has worked amazing for me. I also had somebody say setting aside money for taxes. So sometimes you might get surprised. So I had somebody say they put about 15 to 17% of their income into a separate, you know, account, or just save some money for taxes. Hopefully you don't have to use all this money you're setting aside. So, you know, having that money square, you know, socked away can really help with your state of mind. April 15th, when your tax return professional tells you, okay, give me $20,000 for your taxes. So just putting aside money is a good practice as a provider, and even at a personal level, on a W-2 income, you know, just setting aside some money for emergencies or for paying your taxes is a good idea.
Sorry, Caitlin from Florida. Do you recommend anything specific, like for putting away for retirement? I haven't done it yet since I'm still green. I haven't done it yet, but I'm looking into it, but I just haven't, I'm 29, so I just don't know. What?
29 is a good age for those of us who are over the hill. But okay, so the typical accountant answer is it depends, right? So the first thing you want to consider is, how much can I afford to set aside? Is it $200 a month? Is it $500 a month? Or is it more? Okay. Believe it or not, the government, through some of the latest legislation, they're making it even easier for all of us to set aside retirement plans, and you get tax credits. You know, sometimes if you're doing a 401k, that one costs money. There's some setup fees, and you know, every time you're investing, there's some money that these guys take away from you. Those costs can be tax credits on your tax return, meaning you get to write them off.
Okay.
If you're concerned about the cost, there are some low cost retirement plans like the IRA, but I would highly recommend, you know, speaking with a retirement specialist or a personal financial expert on this. Where I come in is, we can run the numbers and say, oh, hey, you're going to owe 5K at the end of the year. So how about you take maybe 2,000 and put it aside for retirement? It doesn't necessarily mean you're going to owe $2,000 less, but you're going to owe a portion less, a fraction less than what you'd have owed if you didn't put aside the money. So the tax professional will come in and give you the numbers and say, hey, you set aside this much, your taxes will be lower. But the financial professional comes in and tells you exactly which vehicle to use. If cost is an issue, think IRA, self-employment. It's called SEP, S as in Sam, EP, IRA. Those are low-cost plans. 401k, it's really good, especially if you're over 50. And just to give you context, if you're below 50, you can put 25,000.
Okay.
If you're over 50, you're allowed an extra 5k. That's 30,000.
Okay.
And then it gets even more interesting. If you still have more money to sock away with the 401k, you can bonus yourself and actually pay through that 401k, right?
Oh,
If you're just starting out, think IRA, simple IRA. But
okay.
again, talk to your financial professional, and then kind of talk to both your tax professional and the retirement specialist at the same time to see which one works best for you.
Okay. Okay. Thank you.
And at 29, age is really on your side. The power of compounding, it's amazing. You have, so say I'm 51, you have a good 20 years of serious retirement planning that you can put into use and build your wealth.
Okay. Very good. Thank you. Thank you.
Anyone else have any questions? We're gonna wrap up in a bit just to be respectful of everyone's time. But maybe we can take one last question. Okay, well, if there's no questions, I mean, Olga, I don't know if you want to say any last words. But it's
yeah, just like I said, it's all record keeping. Take advantage of the resources from Playground. Please do. If you're paying for the subscription, just take advantage of it. You're doing yourself some good. My hope and prayer is, I know this is a tough industry, but I hope that it is also rewarding, and not just for the children, but at the end of the day, you're the hardest working person in your childcare. We want to make sure that you also reward yourself. And one way of doing this is to not overpay on your taxes. So how about you pay yourself first, right? And you can do this through good record keeping, and just keeping good records and writing off what you really can.
Awesome. And Olga, I don't know if you want to share your email or website in the chat. If anyone wants to reach out with you and ask any more questions, they can feel free to do that. Olga and I have worked together quite a bit in the past, and I will say she is wonderful to work with. So for those who are interested, definitely do reach out. And if anyone wants to have any questions about Playground and how we help you with the record keeping that Olga mentioned, I'm happy to stick around for a bit. And I will also share our email and website in the chat. And you should have my email from the confirmations you've been receiving anyways. Yeah, thank you everybody for joining. Thank you, Olga, for being here with us.
Thank you.